What does tax smart retirement planning really mean?
Tax smart retirement planning really means, certainly when we talk about it here at Legato, looking at your retirement savings on a macro tax level and seeing what you can do to save taxes over your lifetime.
So walk us through how taxes change in the process of retirement.
So most people have heard that you should save in tax-deferred retirement accounts because you're not going to be working in retirement, so your income will be lower in retirement, so your tax rate will be lower in retirement. But we see through planning, comprehensive financial planning and income planning, that many people will be in the largest or the highest tax bracket of their life in their late 80s or early 90s because of the way that they've saved their retirement dollars. Most Americans are saving the majority of their retirement dollars in tax-deferred accounts like 401ks or traditional IRAs. And that means that they're going to owe taxes on those accounts later.
What are some of the biggest tax traps that retirees don't see coming?
So, required minimum distributions. So when we're looking at, when I mentioned that we're possibly going to be in the highest tax bracket of our lives in our late 80s or early 90s, that is because of required minimum distributions. If you're tax deferring your retirement savings, you do not get to choose when you take distributions out of that account. When you turn age 73 or age 75, depending upon your age today, your great Uncle Sam or the IRS is going to tell you when you need to take required minimum distributions out of that account. If you continue to roll that down the road, those amounts can be pretty hefty and add a large amount to your income. The first generation of people that really saved in accounts like this is just hitting required minimum distribution age. So we're really just starting to see how this can affect your taxes later in life.
So when should someone consider a Roth conversion and when should they avoid it?
So it's really a good idea to consider a Roth conversion today. That doesn't necessarily mean that you should do it today. It doesn't necessarily mean it's a good idea for you. It's important to work with a licensed tax advisor and look at a macro tax plan to know if it's going to make sense for you to do a Roth conversion or if it makes sense for you to not do a Roth conversion. You want to take into account what your current income is, what your tax brackets are, and also your current age.
Are there ways to coordinate withdrawals from different accounts so that you can save on taxes?
Absolutely, there are. And it's different for every single person, depending upon how you've saved, what your age is, what your income is. But there's absolutely a way to take withdrawals from different types of accounts so that you are keeping more money in your pocket and less money in your great Uncle Sam's pocket.